Ladies and gentlemen, good evening. This is Christopher Aaron. We are going to have a proper gold price update, and I want to encourage you on this June 5th, 2019 evening. I want to encourage you to please pay attention to the gold mining complex at this time. Whether you are trading or investing in the gold miners or whether you're physical bullion only, gold or silver, this signal will apply to you. You know, I really began to follow this signal in the crash of 2008. And I just remember then, as we look at the short-term price action here, we're seeing gold break that short-term downtrend that we're looking at, holding to the longer-term, the year-long, almost rising trend now. Still not making a higher peak than the February peak, mind you. So we do not have a break in the lower peaks that have been coming. I would like to see that, although we do still have a valid rising trend. So I think whether or not we get that higher peak than the February peak is going to tell us a lot about what to expect over the short run, over the next 3 to 4 months or so. But really what I want to talk about is the more intermediate term price action that I think is setting up here. And going back to my little anecdote, you know, I remember in the crash of 2008, I remember so clearly that amidst the 99% of people who were saying Bear Stearns is going bankrupt, Lehman Brothers is going under, Citibank had to be bailed out, you know, Wells Fargo, everyone was going under, everyone was going bankrupt. The price of oil fell by 80%. This was the end of the world as we knew it if you lived through that. And I remember 99% of the people were saying, therefore, buy gold. And there were like one or two individuals who I was following at that time who were these lone voices and who were saying, wait a minute, guys, we're actually seeing some negative divergence in gold itself as well. And how could that be? And no one wanted to believe them because the system was blowing up. But sure enough, gold fell during the crash of 2008, silver fell, and the gold miners fell more than most financial stocks. So I remember I was so thankful for listening to these few individuals who were talking about things that for one reason or another, most people did not want to talk about. And I think that's because most people align their businesses with having to sell one message, you know, which is that the price of something is going to go up. So they're either trying to sell you gold or silver, or they are trying to sell you stock in their gold mining company. Gold miners are in the business. I mean, they have two primary businesses. One is digging gold out of the ground, and the other is selling you stock. So they're going to say anything that they can to sell you their stock. So you buy it, and it increases their profits and their salaries and their bonuses. So you have to be very careful who you're listening to in this industry. This is not the original lesson that I was talking about. I want to bring up another lesson. This was the follow-up lesson. This is when I really began to chart this for myself as opposed to just listening to other people. This is from 2010 to 2011. This was the all-time peak in the gold price, all-time high in US dollars, $1,923. This is the gold mining complex on the top. So we're looking at the year and a half leading up to the all-time high in the gold price. Okay? So just start to look at what was happening here. Now, I've drawn this resistance level here in black, and it corresponds with the same. I just put the line here so you can see how these match up. We're talking about this resistance here in gold at $1,425 back in late 2010. And notice how as gold finally exceeded that level and rose over the next 6 months by $150, it doesn't look like that much on this scale on the y-axis, but notice $150 rise in the price of gold. What happened to the gold mining complex as a sum? It moved completely flat. And I remember at this time, you know, a lot of people were trying to come up with reasons. They were making excuses as to why the gold mining complex did not advance at all with a $150 rise in the price of gold. I remember people saying, well, because their input costs are going up faster than the price of gold, like oil and stuff like that. That was complete baloney because the oil price in 2011 was much lower than it was in 2008, and the gold price was higher. So that argument fell flat on its face. I heard some people saying, well, it's because they're not making any new discoveries and they're not pulling as much gold out of the ground. That was completely bogus. If you study the data from 2010 all throughout the 2010s for that matter, we are seeing record gold production year after year after year. As far as the amount of gold that is coming out of the ground, I think the all-time high now was set in 2017, but it was increasing throughout all these years. So, people were trying to come up with every reason under the sun to try to explain this and to try to say, well, soon they're going to start rising because they've already priced in these bogus factors here that are holding them down. What was the one thing that everyone didn't want to look at? The one reason that people were trying to rationalize away? Well, let's just look how egregious this got, right? So from the black line, from here, from late 2010 through the peak, gold had risen by $500, and the gold miners were up, what is this, 61 to 63? What is this, less than 5% amidst a $500 rise in the price of gold. I mean, if the gold mining complex really believed this, these things would have been about 300% higher, not 5%. So what was the one reason, as we look at this, here were the stats again, negligible amidst 500. And the big takeaway here is, so flat gold miners as a net sum amidst rising gold. And the big thing that no one wanted to say, no one wanted to admit that this is actually what was happening, but it turns out what was actually happening is that the entire gold mining complex was successfully predicting that these gold prices were nowhere near going to last for any extended period of time. And so the sum of the gold mining investors as a whole, obviously not those investors who are trying to sell you their stock, because they wouldn't say that, but the sum of the investors in the gold mining companies quietly were selling. So they were selling their shares here, they were selling their shares here, they were selling their shares here every time gold was going higher. Why? Because as a sum, the market was smarter. If you think about it this way, the market of the gold miners for an extended period was smarter than actual gold investors. Okay, they were correct. They predicted that this rise would not last, and that's why they didn't move higher. So this is the really uncomfortable thing that a lot of people didn't want to talk about here. They were trying to rationalize it away by every means possible. And by the way, just look at this stat. So the GDX, the warning on the gold miners, this was 2.5 years early, if you think about it. So this warning started to appear here in late 2010, right? When gold was $1,425. Gold didn't fall back below $1,425 till April, May of 2013. 2.5 years later is how early, this signal was. Okay, so, and you can imagine, people that were looking at this signal in here, and then gold didn't fall all the way back. A lot of people were saying, well, you're wrong. Look, gold is still $1,700 or $1,800. 2.5 years early. Let's move along. Fast forward to today and an early hypothesis about what is setting up. Now, we've been looking at this every several months, and we look at this, by the way, in the premium subscription. If you're heavily invested in the gold mining sector or in physical bullion itself, I can't imagine how this is not worthwhile for you to pay attention to this signal every week, which is pretty much what we do in the premium service, just to let you know. So we are looking at the gold mining complex here at the top. This is the HUI index. It's a little bit more pure than the GDX. And we're looking at the price of gold here at the bottom. And it should just be, gold miners, gold. It should just be very clear to see what we're observing at this point, right? So gold miners, 40% down from this peak amidst flat gold prices. And you can see every time the price of gold has gotten back into this resistance zone, look at the 2016 peak, lower peak on the miners, lower peak, lower peak, lower peak, and we'll see. Is this going to be the next lower peak amidst the gold price being essentially flat, and matching this resistance zone. So if you just stop and think about one thing here, which is that in the previous example, we were looking at rising gold prices and flat miners. This is a relatively worse performance because it's flat gold prices and declining gold miners. I hope that makes sense. So at this stage in the game, it's like, here's what we're seeing. And now I've just zoomed that chart out, and we're looking, this is what we were just looking at the last 3.5 years is what we were just looking at. And now we've zoomed it all the way back to that peak in 2011. Now, I actually want to say here that from the standpoint of someone who would like to invest for the long term in this sector, I would like to be a buy and hold investor and make changes to my mining portfolio and hold a core of Bullion, which I do, and build that core, and then do a little bit of light trading on the side, try to trade some of these swings in the paper markets. That's what I like to do. I like to take it from basically a three-pronged strategy. Okay, so it's not either or. It's not physical only or miners only. Or trading only. I like to do a little bit of each of those. But from someone who wants to be able to do that, and here's the recent, I'm not even drawing it in there, but remember, we were looking at that little downtrend right there over the last 3 months. And now we've seen this breakup, but we still see such a clear divergence between the gold miners, again, 40% below this peak here. And we can draw in these, if you will, these stage 1 base resistance levels. If you read that book, the book by Stan Weinstein that I recommend sometimes, Secrets to Profiting from Bull and Bear Markets, you know exactly what I'm talking about, the stage 1 base. Very clear here to see. It's a bit of a zone for gold here, extending up to about 1430 or so, down to the 2016 peaks. And for the gold miners, it's a bit more of a flat kind of base. And you just say, well, gold is now functionally challenging this base again, and we're 40% lower here in the gold miners. And so back to what I wish would have happened from someone who wants to be able to invest in the sector for the long run and not have to worry about, bullish, bearish every couple months. I wanted to see these things getting better synchronized sooner. Okay, so I wanted the pain to come first, which in other words means, we have the gold miners all the way down here. If you just draw a line left, it's clearly below this 2016 peak, which corresponds with 1120 gold. I wanted to see the pain come first over the short run, so we could have a nice 3 or 6 month downtrend, get gold back down to 1100 or 1200, have the miners show some positive divergence, get the sector setting up nice so that we can start getting some leading signals, positive leading signals, which is what should happen from the gold miners. And then the whole thing could move higher maybe over the next 12 to 18 months and finally break this. That's what I wanted to see, because then we would have had the pain early and we could have had a real shot at a sustained bull market. I think, unfortunately, and this is an early hypothesis, but this is what you have to do. If you're someone who's technically oriented, you have to create working models. You have to create a working hypothesis at regular intervals. I like to do it anytime the market shows me something that I wasn't expecting. I step back, I take a look at the long-term charts, and I say, what is this market now trying to show me? I think this market is now going to take the more challenging of the two scenarios that I was imagining. So I just talked about the first scenario where we would have gotten the pain first, and then we could have rounded out of this base nicely. I think the market's going to take the harder scenario where it's going to hurt more people in the long run. Because it looks to me like what's getting ready to set up is something, and don't take these arrows to be literal, okay? I'm coming up with a working hypothesis, and then as we go along, we evaluate specific support and resistance levels to either confirm or deny how the hypothesis is playing out, okay? This is given for general direction, general trend ideas at this point. I think what is setting up here If I take this entire thing into consideration, the early warning signals we saw at the top and what looks to be an even worse signal setting up here as we attempt to round out this base, it looks to me like at some point over the next 6 to 12 months, as long as that rising trend holds here that we were looking at, it looks like gold is getting ready to break out of this stage 1 base here. And I think what is going to happen is, the target for a breakout, we'll look at that when we get closer to the actual breakout. We will have a high probability for the actual target. This arrow is not meant to be the actual target. It will be somewhere between 1450 and 1750, which is a huge wide range, and we will narrow that in as we get closer and we observe a number of factors. But it's going to be somewhere significantly higher than where we are now. But I think what is setting up this negative scenario, this more challenging scenario, because what's going to happen is that everyone's going to get sucked in as this market breaks this base, and everyone's going to see, we took out the 2016 highs. But I think what's going to be happening here is these miners are still going to be lagging. So can you imagine something like we get to 15 or 1600, we're a few $100s higher than we are today, and the mining complex still hasn't broken out of these, it's higher than it is today. So maybe there's a trade setting up here in some of these miners, but it's still below this stage 1 base. This is what I think is setting up based on how this signal is now going on 2.5 years, but gold continues to ignore it. So it's getting more and more divergent as we go along. And I think what is setting up is something that is going to be even more painful in the long run, because everyone is going to get sucked in right at the peaks here. And then similar to what we saw in 2011, there's going to be a major reversal lower, and it'll basically have to wash everyone out. It'll have to wash everyone out, and it'll have to restart sometime in the mid-2020s. This is my working hypothesis at this point based on the surge that we're seeing here in gold. Gold miners that are still at a lower high than they were. Every one of these peaks lower and lower and lower, going all the way back to 2016. Nowhere near the stage 1 base resistance. And just as a reminder, I know that what I'm saying right here is not going to be popular. I don't care about that. I started publishing research. You can go back to the archives. I started publishing research here. And I was saying, I think there's a big move setting up in gold and the gold miners. It was August of 2015. Okay, we were right in here. This was not popular for me to say at that point either. We had been in a 5-year bear market. No one wanted anything to do with this, especially silver. Everyone was saying, no, silver is just going to go lower and lower and lower forever. So it was not popular that I was saying this here, and I suspect by the time we get this scenario setting up, which is what I expect the highest probability scenario at this point, I think I will be equally as unpopular as we get a nice surge higher, several $100s. It'll be equally unpopular as it was down here, but I'm not going to stop saying what I see in these markets. And so once again, I think what is setting up, this is going to be the most challenging scenario that we could have imagined. Again, I wish we could have gotten the decline earlier, get these markets synced up nicely, and then have both things moving with the gold miners leading. We could have had a real sustained bull market. Some of my colleagues who practice Elliott wave theory, I'm not an Elliott wave. I don't believe, it's not that I don't think that Elliott waves cannot be correct. I think they can be correct sometimes. But where I disagree with the Elliott wave practitioners, just to let you know, is that I don't think every decline or every surge follows the proper Elliott wave. Whereas the strict Elliott wave practitioners say that every move in every market is following that Elliott wave 5 higher and then ABC correction. But I have some colleagues who have brought to my attention that what they see happening here from the Elliott wave theory is something like an A higher in gold, a flat B for a correction, and then we would be getting a C. And the key is that an A, B, C is a corrective move. It's not an impulsive move. It's a corrective move of a still valid downtrend. So we'd be looking at this as 5 waves lower, 3 waves higher, and then 5 waves lower to take us most likely below this 2015 low well into the 2020s. So I'm just bringing together various data points here for you. We're nowhere near this at this point. It looks like what the market wants to do, the gold market, the bullion market, we'll have to talk about silver separately because there's a real difference in that silver chart than the gold chart. And that's manifesting, by the way, in a gold to silver ratio that is not moving down as it was in 2016 in favor of silver. It's moving up. Even as gold is threatening to break out, silver is still declining versus gold. So that's another major red flag that I'm looking at. I think this market's getting set up once again for the most challenging scenario, the most challenging for the average investor, which is going to be that at some point over the next 6 to 18 months, it breaks out and it sucks everyone in, and then it has a major reversal lower, basically to wipe out everything from the last few years. So this is what I'm looking at as an early working hypothesis. We will be updating these charts each week in the premium service. As I said before, if you're heavily invested in one way or another, I simply can't fathom that it's not worth keeping these things updated on a weekly basis. That is what we try to do. And we also cover what's happening in the stock market, the bond market, and silver for members each week with flash updates right to your inbox. I work with individuals too. As I said below, just keep in mind there are people out there, there's 2 different business models in this world. You are either trying to sell precious metals or you're trying to sell your stock if you're a gold miner, or you are providing analysis and research. So, be very careful about who you listen to. That's my takeaway from that. I certainly won't get everything right. But I'm at least free to speak when I see negative scenarios setting up here. So if you have a unique situation that you would like to speak, we strategize across the board. I have some clients on each end of the spectrum, so there's nothing too big or too small that we can't work with here, just to let you know. This, I think, will be especially important as we come into that potential for a major high if we get that breakout in the gold price. This is all forward looking. Now, it's going to get very challenging, as I said, if we get that scenario, which looks most probable. It's going to get very challenging in the precious metals market sometime 6 to 18 months from now. And this is why we're getting ready to cover a whole lot of other markets. So there is a service and it's coming soon. We're going to cover these other markets. Stay tuned, coming soon. I want to thank everyone on Patreon for supporting these videos. I try to give the best analysis that I am capable of here for free once a week. We obviously dial it in more extensively in the premium service, and we get flash updates midweek. But I do thank you if you find value in these videos for supporting on Patreon as well. It will be a very challenging time. It certainly will be. That signal, that negative divergence signal that we're seeing, there's no way you can refute that. If that signal is going to be wrong, it will be the first time that I've ever seen that be wrong. And so we'd be falling into slippery territory there of this time it's different. The four famous worst words that we can say. There is a first time for everything. I suppose it could be right every once in a while that the gold miners are just wrong for 2.5 years. I've simply never seen it, and I've looked at data going all the way back to the inception of the gold mining indices, all the way back to 1984. I've studied every 2 to 3 year period since then, and there's never been once a single time where the gold miners have lagged for this long, and it has resulted in a sustained move higher. Keyword sustained. Thank you. I'll see you this time next week.